Hey guys, welcome back to another episode of NGMI Trades. The date is the 11th of August, the day after the US August CPI number. Today's episode is going to be short and sweet, so let's get straight into it. July 2022, 9.1% US CPI, the highest in decades as we've heard over and over again. What we were looking for yesterday was a rollover in inflation. Predicted was 8.7%, so the surveyed results were already coming in lower, but as we know, markets are forward looking. Anything below that would be green candle territory, and this is exactly what we got. 8.5% was where the number came in. Markets reacted accordingly. Equity markets up to their highest level in 3 months. Bitcoin now back in the 24Ks, but really it's not about one day's action, it's about what's to come, and we're going to come onto that very shortly. The second thing I want to mention regarding yesterday's number was not the headline rate of 8.5%. It's actually the core CPI number. So surveyed at 6.1%, it actually came in at 5.9%. And now this is really important because core CPI excludes energy and it excludes food prices. It is just goods and services excluding those numbers. It is what the Fed looks at more than the headline rate when deciding interest rate policy. So that's coming down, takes the pressure off the Fed, and if it continues to come down, we'll give them room to pivot, which is exactly what we've been talking about now for months. Now, where are we? As always, I think it's very good to be accountable, so we're going to go to a tweet from essentially June the 19th, which coincides with our June video. So in the tweet we said, inflation has topped, oil is rolling over, rates are coming down, DXY has topped. Continuing to DCA into risk. The market is all one way at the moment. The summer pivot will be powerful. It's going to be a beautiful late summer. At the moment, this is playing out exactly as we expected. Inflation has topped. And I think September will show us that as well. Oil has capitulated. And we're going to look at that in a second. We talked about it in the last episode. Back in June, it was $120 to $125 a barrel at the peak. It's now sub $90 a barrel. DXY has topped. We're going to go and look at DXY, but off the back of yesterday's inflation number, DXY fell off a cliff. And I imagine that trade is just going to continue rolling on as we move lower and lower. Now, again, accountability. And that's what this episode is really about. Oil. This is a tweet from the beginning of June. As you can see on the left-hand side, we've got oil. If we haven't peaked yet, we're very, very close. Lots of noise, but fundamentally, I think we see a 20% sell-off, etc., etc. This will help bring inflation lower than expected. I am a seller, scaling it at these prices. So that's $119 a barrel. It did move higher after that to $125 a barrel where it peaked. I scaled into that trade, and then fast forward to and I got out of this trade slightly early. Well, slightly early. I got out of it definitely too early. It's $106 as you can see here. Yesterday's move low on oil, so this is circa a month later, maybe 5 weeks later. Yesterday's move lower on oil concentrated just under a 20% move. Have closed the trade. Now I'm putting this up for accountability A, and well also B. And this is going to sound like a complete douchebag comment, so bear with me. Look, I retired from work, or 9 to 5, whatever you want to call it, going into the office now a year and a half ago, when I'm 36 years old, to do this essentially. And this trade alone, this oil trade, has paid for my summer. Now I know how that sounds, and so it comes with a big caveat, so I apologise for sounding like a complete douche, but that's the reality, and so I wanted to put it out there just to show sort of what these things can do. And this is never financial advice. This is more of a hobby for me. It's just documenting my trades, almost like a trading diary, so to speak. But that is accountability right there. The final sentence, DXY next, beginning to scale into a short here. So dollar strength index. This is the beginning of July. We're going to go and have a look at DXY now to show you how that trade is playing out and what I'm expecting to happen next. So then, DXY. As per the last tweet, beginning of July, let's go to those sort of levels. I think it was the 6th of July, so 5th, 6th. I know where I started scaling in. I know that I actually started scaling in at circa 105, where we are now, but then I rode this move up and scaled into these prices as well. So now we've moved lower back down to 105. I'm sitting on a P&L position which is looking very healthy, but this time I'm intending to run that. I think we've got a lot more gas in the tank, whereas the oil move is, and the commodities are famously aggressive, and the moves you can see are very powerful. DXY, this is a currency move, which again, currency can be very aggressive, and this wasn't a very aggressive move higher, which I think obviously I started building this short probably slightly early at 105. But as I say, it's about position size, it's about having a plan when you go into these trades, and I'm now sitting on a position where I'm very happy just to let it run. If I've called it wrong and we head back up to 109, so be it, but right now I'm enjoying where we are. So let's have a look at what could happen next. So DXY came off yesterday aggressively because of the inflation print. It's all of these things are interconnected. As inflation comes down, the market realizes the fact that the Fed will have room to pivot. If they pivot their interest rate policy, that will weaken the dollar. DXY comes lower. Simple as that. You don't need to overcomplicate it too much more than that. And what we're looking for is to come back and retest this ascending channel. Look, there will come a point when we will break into that channel, and that's why I'm happy to sit on this trade and wait for us to come back into that ascending channel, and then maybe take some profit and take it off the table. But yeah, that's really what I wanted to show you from that basis, because it's great to be accountable. It's good to know what you've done right, and it's good to know what you've done wrong. Really, trading is just about understanding you're going to have winners, you're going to have losers. You've got to run the winners, and you've got to cut the losers as soon as possible. As long as the numbers you're coming out with at the end of the week, the end of the month, the end of the year are green, then you're doing it right. So yeah, that's DXY. Let's get on to Bitcoin. So, continuing on the theme of accountability, this is a tweet I released yesterday, just after the US CPI number. There are no certainties in life, but after that inflation number, Bitcoin 25k looks almost nailed on. Now, Bitcoin obviously reacted well post the number, as did the rest of the crypto market, and we'll come on to Ethereum because that is a trade which currently I'm definitely out of the money on. But yes, everything reacted well, lots of green candles. I actually picked up some leveraged Bitcoin immediately post this number because it is just a risk-on scenario. Now, I rarely trade like this. I'm a macro trader. I don't like these small in and out scalping bits and pieces. It's not my forte. I'm not good at it. So, but this felt almost as risk-free as you could get in this sort of scenario. So picked up at 23.5k. I've chopped some out already this morning at 24.5k, half the position. I'll chop out the rest of it at 25k. It's just an easy few $1,000 trade essentially, where the fundamentals that we've been looking at now for the last few months all have lined up, and exactly what we were hoping would happen happened, and you have to take advantage of that when you see it, and that's what we did yesterday. So anyway, continuing on, breaking out of the ascending channel, and it's on to the 20-week SMA. Break out the ascending channel. Now we're going to go and look at the ascending channel and the 20-week SMA, which is the smooth moving average. So let's go on to that. Let's go on to the charts itself. So Bitcoin, currently riding up this ascending channel from the lows back in June. Sitting at 24.5k post number. Pre-number, we were low 23s, high 22s. Obviously, market moved higher aggressively on this inflation print. And now, in my opinion, we will come up and retest the top of this ascending channel. So 25.5k, something like that. 25 to 26k, that sort of region. These are just lines on a chart at the end of the day. Let's be honest. There is a time and a place for TA, etc. And in all honesty, if I am wrong on my opinion on crypto, I'm okay with it, because these are 5 to 10 year trades for me. These are retirement trades. Bitcoin and Ethereum I can happily lock up and forget about. But That's not a lot of fun, so I don't do it. But they really are. I mean, I'm absolutely convinced they're the future, as I'm sure most of you are that watch these videos. So if I'm wrong, I'm okay with it. Anyway, at the moment, we're not wrong and we're moving higher. And I think this is where we will go and retest this 25 to 26K area. And then from there, that is where the real battle starts. If we break out of that ascending channel, we then come back to the 20-week moving averages, sitting at circa 28 to 29K at the moment. So these sort of areas, which I think which will be the next battle. Reclaiming those, and then it really is game on. But there's a lot to do before we can consider that, really even put that on the table. This month is all about watching for US economic data getting grimmer and grimmer. Global data to a certain degree as well, but the whole thesis that we've been talking about now for months is this combination of DXY, oil, inflation all rolling over, giving the Fed room to pivot, because this risk sell-off we've seen over the last 6 months, 9 months, this aggressive risk sell-off is all to do with the fact that interest rate expectation has changed. Now, in a falling economy, you don't want to be rising interest rates unless you have to. You have to when inflation is the big elephant in the room. But if inflation is coming down, then you don't need to do it. And that is what markets are pricing in. So in September at the FOMC meeting, if we've had a month of terrible US data, we might see that start to happen. And if we do, that's when you really start thinking about a massive rally. I mean, we've already seen a massive rally in Ethereum. It's done 2x, but we're talking about a big rally before what I think is going to be an absolutely devastating 2023. Anyway, that's Bitcoin. That is a trade we've been riding well. The good, let's go and look at the bad and the ugly. The bad and the ugly, from a personal basis, is the ETH Bitcoin trade, which I am still in. So, ETH Bitcoin. This resistance line held as support for 1 year, bouncing off it numerous times until June this year, or May this year, where we collapsed into the channel aggressively and came down to this 5.15 level. We took this trade at 5.1, where exchanged Bitcoin for Ethereum and rode this up to the top of the ascending channel. I was over the moon with this trade, 37% booked. So what that means is that 37% more Bitcoin in the account when I changed my whole stack of Ethereum, bar NFTs and some play money, back into Bitcoin. Chuffed with it. Thought it was it was a great trade. However, what the brilliant trade would have been to do is to let it run, because what we've done since there is move up to 7.7. So closing that at that point, I'm now 0.07 from 7 easy. It's a 10%. It's a 10% loss, so to speak, in Ethereum value. So I have 10% less Ethereum than if I'd held the trade. Obviously, I'm still long the market in a US dollar fiat terms. We're up, but yeah, you can't call them all. But this has really annoyed me, and we're going to have to decide what we do here. Whether we cut the trade, swap back into Ethereum. I don't think it's the right move at the moment. I think Bitcoin will have its time to shine, but at the same time, I've got to fully recognise the fact that I underestimated the merge narrative. I didn't think it would hold as much steam, and this move has just been parabolic, really. Now, Ethereum, this is a parabolic move. $880, $870 up to where we are now of closing in on 2K. It's a monumental move. But in all honesty, I'm not a micro trader, I'm not a scalper, I'm a macro trader. Look at the bigger themes. I think that as long as all the indicators that we look at continue doing what they're doing, this is just going to continue this month. The key for August is watching the US economic data. If it keeps getting grimmer, then September, October are going to be, it's completely ironic, but they're going to be fantastic for risk. If the data doesn't come in as grim as expected, then maybe we reevaluate. But at the moment, it's all about, we have a game plan, we know what we're looking for. You just let it play out. Let the trades keep rolling on. There's no point overcomplicating it. We know where we are. We've got a game plan. It's as simple as that. Now, that's really it for this week, guys. That's all I wanted to summarize. For those that are interested, I am going to be starting a Telegram. I don't want to call it a calling channel because it's not a calling channel. It's not financial advice. It's just going to be a channel where I enter and exit trades, like a trading diary, really. So if people are interested in that, shoot me a DM or leave a comment below, whatever you want to do. And yeah, I'll let you know when it's up and running. Maybe a Discord chat that goes with it. God knows, I'm a bit behind in this whole, as you can see by the poor production value of these YouTube videos. But yeah, look, I'll be putting something out later on this month that is just going to be a hobby. It'll be completely free, of course. I don't care about any of that. It's just hopefully it will be helpful to a few people. So yeah, shoot me a DM if you're interested. I have been told that I'm supposed to ask for people to like the video and subscribe, because apparently that's meant to be good for YouTube as well. So if you want to do that, that'd be wicked. Yeah, have a cracking week, guys. Speak to you next week.